Welcome to a Roundtable Cannabis Chat. I'm joined today by Dan Ahrens, Managing Director and Chief Operating Officer with AdvisorShares. Dan, thank you so much for your time.
Sure, glad to be here.
Also joined by Nawan Butt, Portfolio Manager with Purpose Investments. Nawan, thank you for making the time.
Absolutely. Excited for this.
Both of you gentlemen cover the cannabis space and have a particular focus on the US as part of your day-to-day. I'm wondering if I can start with one question for both of you, but Dan, can you take it first? What has been sort of your biggest takeaway of the cannabis investment year so far?
Well, it's something I had said was always coming, in my opinion, and it's a separation. And what I mean there is in managing our exchange traded fund, it's AdvisorShares Pure Cannabis ETF, ticker symbol YOLO. I said there was going to be a separation between the Canadian LPs and cannabis business on the US side of the border, in particular the multi-state operators or MSOs. I also said there was going to be a separation between companies with strong balance sheets and either profitability or at least a clear path to profitability, and those that don't have balance sheets or a path to profitability. Cannabis stocks had traded way too much on hype in the past. First, they went up on hype in 2018 and early 19, and then they all sold off as a group when that hype failed. Whether or not a company was actually performing, people were throwing out the good with the bad. So in 2020, we're seeing a real separation between some of the biggest Canadian LPs that either don't have a strong balance sheet and have needed to add more shares and dilute shareholders, and they have a long path to profitability. There's a few good operators in Canada, and US companies that do have strong balance sheets in many cases and do have profitability, and we're seeing it in performance. Companies on the US side of the border are performing well, and there's a real separation that far too many investors don't know and don't understand. I see people pumping money into some of the big names or even the biggest ETF blindly. That's my biggest takeaway right now.
Okay, Nawan, what about you?
I would echo everything that Dan is saying. In complete agreement, there is definitely a separation between the US and Canadian space, and within the Canadian space as well. Winners from losers is a little crude way to put it, but the great way that Dan just said is like the strong balance sheets and the guys that are actually operating versus those that are the not so great operators. My biggest takeaway this year has been actually the real momentum that we've seen pick up in the US around the Democrat Party of the US actually put pen to paper and come out with policy objectives, or at least policy recommendations, towards the massive proliferation of medical cannabis, even if it doesn't really cover the whole space, including recreational or adult use cannabis, but leaving that up to the states, creating a framework around the legalization of medical cannabis and using that sort of framework to propel the causes of social justice movements as well. That has been huge for U.S. momentum. That's why we're also seeing the U.S. names separate and go on their own path, make their own valuations. That's been huge. That's been hugely positive. That's my main takeaway from this year is the actual pen to paper that we have, a policy, a guidance, a plan that we have from contenders of the U.S. elections, but nonetheless, things are starting to look positive.
When you mentioned the elections right around the corner for the United States, the presidential election will draw a lot of attention and the future of cannabis in that aspect. But also a few states are moving forward with a vote on their medical programs or recreational programs. From the new states that are voting this year, what are the ones that maybe excite you the most, or you feel like companies will be more interested to jump into?
So on the adult use side, we've been very sort of excited by what's going on in New Jersey. It has been it has been under move for a while. So the momentum has been building up for quite a little bit in New Jersey. But having a state right in the middle of a massive population that goes recreational or adult use before any of the neighboring states. Massachusetts is a good example, but New Jersey does lie in between the massive populations of Pennsylvania. You have New York on the other side. And just that within itself is very exciting because it creates this beacon of, an adult use framework within these heavily populated states. And we're excited about that. They've been doing it in a controlled manner as well, with limited licenses, with vetting all the players that come in. So we like that quite a bit. The other one that we're looking forward to is Arizona. Arizona's got a very robust medical cannabis program that has been growing at a good clip for a few years now. We look forward to the referendum they have on adult use legalization. We think that could be a big turning point for that state as well, because their infrastructure is very well built compared to some of the other states. They've just had medical cannabis around for much longer than a lot of the northeastern peers. So Arizona is something that we're excited about because a lot of these operators will essentially be able to turn over a lot of their operations from medical to adult use very easily.
And I'm curious if you could also share some of the states that excite you as we head into the last bit of 2020, and also maybe some of the companies that you're going to be paying most closest attention to in terms of depending of how these votes go.
Sure. It's interesting. He mentioned Arizona. Arizona's a great example of a strong medical marijuana state that's going to add recreational. And it's pretty widely believed it's going to, be approved there. Harvest Health is a company that had underperformed a couple of years. It's really reorganizing their company a little bit. I think it's undervalued, and the state of Arizona should be a home run for a company like that based in Arizona. Another thing about these states that have a strong medical program and are now adding recreational is to look at the model of Illinois. Illinois got it right. The regulators handled everything very, very well. And Illinois just adding recreational at the start of 2020 has been a huge success story. But the other thing that was already mentioned, New Jersey looks very attractive, and Pennsylvania right next to it. And the interesting thing here is, again, we have states that have a model to look at in success that Illinois had, but in the Northeast corridor, there's gonna be a domino effect. When Pennsylvania falls and New Jersey falls, New York's widely believed not to be too far behind. All of these state governments have been in communication. The governors have been in communication, and they want to have an organized plan for recreational marijuana between all those Northeast states. The implications are huge. Now, one thing you haven't asked yet, but I have to bring back one of my main points I've been talking about, is when these states fall, and I say fall, add recreational marijuana, it's not going to matter who wins the presidency. These states are adding recreational marijuana. It's going to continue. There could be additional reforms that I'm sure we'll get into. But the important thing here is this means nothing to canopy growth. This means nothing to Tilray, nothing to Aurora, nothing to Kronos. I want to, almost pound the table here, and a lot of the mainstream media, whether it's TV or print, talks about states adding marijuana, and they talk about US marijuana reform, and then they tag those ticker symbols in Canada, or even the biggest ETF in the United States that invests in all those Canadian firms. And those firms and that ETF have zero exposure to companies selling marijuana in Pennsylvania or New Jersey or Arizona or any other state in the US. That's something I really want to educate investors on.
Of course, there's still a lot of information to be known for investors. Dan, you've spent a lot of time focusing on the U.S. and trying to really create that distinction, as you mentioned, between the U.S. names and the Canadian names. When it comes to the U.S. pool of names out there, what are the kind of things that you're looking for to create division between these companies, or maybe where do you feel like the smart money's headed in terms of how these MSOs operate, or how they differentiate between one another?
Yeah, that's easy to answer. And all somebody has to do is look at our fund's top holdings. I want to remind investors that an ETF, an exchange traded fund, usually has daily transparency. People can go to our website at AdvisorShares.com and see the holdings every single day. So you can see those holdings in our fund YOLO. You can also see the holdings in the brand new fund that we launched just this month in September, ticker symbol MSOs, MSOS. The holdings are there daily, and MSOs is the AdvisorShares Pure US Cannabis ETF. It's focused solely on the United States. Now, it's easy to see, as I said, the top holdings. The top multi-state operators, in our opinion, are Green Thumb Industries. They have a big focus on the Midwest and Northeast, but they operate in a number of states. They're operating profitably, but they have one of the bigger footprints. Very well-run company. The next is Curaleaf. Curaleaf acquired in the past year Grassroots. With the Grassroots acquisition closing, Curaleaf is the world's largest marijuana company, the largest cannabis company in terms of sales. It's not Canopy in Canada that everybody talks about too much. The largest marijuana operator in the world is Curaleaf. They have a very large footprint. They're operating in a number of states. They're doing a great job with their branding, having name brand marijuana products available in many, many states. Also, I have to throw another company in, what we call this big three. It's Trulieve. Now, Trulieve is also a multi-state operator, but they dominate the Florida medical market. In the next couple of years, a lot of people feel that Florida will also add recreational marijuana. But right now, it's one of the strongest medical marijuana markets in the United States. Trulieve is a profitable company. They're really doing pragmatic growth. They're now expanding into a handful of other states, but they're doing it wisely with an eye towards their balance sheet, smart growth. Those big three are the best multi-state operators. And then we also invest in another company, Innovative Industrial Properties. Now, Innovative Industrial Properties, IIPR, is a US listed REIT, real estate investment trust. You're not going to find it in index-based cannabis ETFs because it's a REIT. It's not a stock, it's not an equity, but most people know it acts a lot like an equity. This is a company that, even in spite of COVID-19, is near 100% capacity because all of their customers are cannabis companies. They're providing valuable capital to many cannabis companies in the United States through sale leasebacks. They have long-term agreements, long-term income streams, and once again, they are near 100% capacity for a real estate company because everything they do is in the cannabis space. A lot of other names I could talk about, but those are right at the top of my holdings in our fund MSOs.
Yeah, I see. Nawan, when it comes to the US market, I'm curious if you could expand about the relationship that you could see developing between the US and the Canadian names. Now, Dan has mentioned, very smartly so, that the changes that are happening right now are not affecting directly to Canopy or Aurora or Freya, the biggest Canadian names. But moving forward, these Canadian companies have not been shy about saying that the US is a big target for them when it's legally available to do so. How do you see that relationship moving forward between the very desirable market and these companies out there?
Absolutely. So, we've seen the relationship move in a couple of different ways already. Yes, most Canadian companies right now, their primary goal is to start making money and then somehow get into the US because that's where a massive growth opportunity for them sits. But we've seen a couple of examples of some companies actually take some pretty innovative routes into getting a head start into that. So Canopy Growth, even though it is a Canadian domiciled, Canadian focused company, still has a funny relationship with Acreage Holdings of the US, where they were able to lock in some contingent warrants, which are convertible to equity upon the legalization of cannabis in the US at a larger scale. So it's a way for them to lock in exposure into the US, exposure to the growth vertical of the US by coming in with this very innovative way of ownership. It's currently sort of structured as a loan, but it will become direct ownership once that contingency hits. The other the other company that they've invested in as such is a company called TerraSend, which is primarily, or which used to be a Canadian focused company, but has switched over their operations to be more US focused. So they went out and bought some US assets, and about 90% of their revenues are currently driven out of the US. Canopy Growth, again, has a similar relationship with TerraSend, where they have taken, I believe it was an $80 million investment on the debt side, which would be convertible into equity upon legalization. So that's one sort of interesting way we've seen some of the larger players with big balance sheets try and come in and get a head start on the market. The other way is positioning the Canadians positioning themselves as CBD brands in the US. So we saw Aurora come in and buy a company called Reliva. We saw Kronos come in and buy a company called Lord Jones. And then we've seen similarly on the cannabis side, a sports nutrition company that they were able to purchase, I believe earlier this year, with the same idea of getting CBD exposure in the US. CBD also is parallel to cannabis. It's not quite the medical cannabis that we talked about. It's scheduled in a completely different manner. So under the 2018 Hemp Act, it was legalized, but CBD is still a huge growth vertical, which is in parallel to medical and adult use cannabis that we speak of. And creating a brand in CBD is currently thought of to be as it's going to be helpful for when brand development needs to happen on the THC side of things. And that's the sort of second way we've seen a lot of these Canadian guys come in and take a very small portion, but start brand building, which everybody believes is going to be the most fruitful exercise at the, at the end of this proliferation, is going to have that. It's not going to be the cultivation that they're putting together, the extraction, the product innovation, and the branding is going to be the very important part. And that's how the Canadians are positioning themselves in those two ways.
I see. Dan, I'm curious, you've talked a lot about the attention that the Canadian names are getting when you feel like it might not be as warranted. Is there anything about the Canadian investment side of things for cannabis that excites you, or you feel interested by or intrigued by, or feel like are good steps towards the future?
Well, certainly. I've said often that the Canadian provincial government rollout of recreational marijuana was handled very, very poorly. And the fact that it was done so poorly throughout most of 19 leaves a lot of upside. They didn't have enough brick and mortar stores, especially in the most populous area of Ontario. So they're improving that. They dragged their feet on rolling out what was called Cannabis 2.0. Well, in the US, they've been selling derivative products like, gummies and edibles and drinks, for years. Canada was just getting on board that. So Canada still has upside because they're going to fix some of their missteps. There are attractive companies in Canada. They're called Village Farms and Afria. I don't know if there's much besides that. We're big fans of Village Farms. They have a strong balance sheet. They're taking away market share from some of their bigger competitors. They're profitable. We have it as a top holding in our fund, YOLO. Another one is Afria, a strong company, solid balance sheet, acting profitably. But again, some of those biggest names, it just burns me up. The lack of education. You turn on CNBC and they're going to flash up Canopy, Aurora, Tilray, Kronos. To back up one step, at least Canopy and even Kronos have strong balance sheets. So they're not going anywhere. Canopy is trying to act more profitably. They're working towards profitability by cutting expenses. And they are being innovative by trying to get a foothold in the US in something like acreage and investing in a CBD company. So props to them. The problem is they're still light years away from profitability. But some of the other big Canadian companies, again, setting Village Farms aside, setting Afria aside, a number of the other companies are far from profitability and have a weak balance sheet. That means they're gonna add more shares. They're gonna dilute shareholders. We've seen this time and time again with a company like Aurora. And once again, I'm gonna come back to education. Let's get all the investors educated. So all those people stop their chatter about Aurora, all the Robin Hooders out there. They need to get educated about what they should be investing in, and there's a difference. And even everything that was just said a few minutes ago about these Canadians trying to get footholds in the US, do you know why they're trying to get footholds in the US? Because the US is at least 10 times the size of the market in Canada. The opportunity is in the US. Everything in cannabis growth is about the US, not Canada.
I think that's a great way to wrap that up. Thank you so much for your time, both of you gentlemen. I really want to appreciate it. I really appreciate it. And we have to reconvene soon enough as things progress in the cannabis sector. For the Investing News Network, I am Brian McGovern. Don't forget to like this video and subscribe to our channel for a lot more interviews. We'll see you next time.